Yes. Good afternoon, good morning, good evening. Anywhere you are, let us have a look at part C of the accounting training syllabus, the use of double entry and accounting system. We are going to look at the subtopics that falls under here. We are going to have a look at the role of source document as a first topic and a double entry system. We would like to go and look at the need for books of prime entry, sales and purchases day books, cash book, and petty cash. I just want to remind you that this is one of very important part of accounting. If you want to know the basis of accounting, it is absolutely important for you to know the sources, the records, and books of prime entry, because that is where the whole story begins. Before we dive into, we have to get the background why we need to prepare the source document, why we need to record, and why do we need to prepare the books of prime entry. Prime means very important. I just want to dive a little bit and let us look at this. It says, from your studies of the first 3 chapters, you should have grabbed some important points about the nature and the purpose of accounting. Very important point there, nature and purpose. Nature means how the principle behind it, what guides the accounting. And the purpose means, why do we need accounting? Why do we need to study or practice or record transactions in books of account? Most organizations provide products and services in the hope of making a profit for their owners by receiving payment in money for those goods and services. That bullet point tells us the reason, that's the purpose for accounting. We prepare it in order to determine whether the business got profit or losses. And that is the aim of most organizations. The role of accounting system is to record those monetary effects and create information about them. Our purpose is to record anything of money values and create information. Why should we create information about it? In order to make decision, in order to pull out the data that cannot easily be pulled out. Let's go. You should also by now understand the basic principle underlying the statement of financial position and statement of profit or loss. How do you go about preparation of these two? Financial position, that's balance sheet. Statement of profit and loss, that is statement of income and expenditures. By now you should be knowing how to walk through it. If you don't know, never worry. We now turn our attention to the process by which a business transactions work its way through to the financial statement. Understand that this financial statement that we are talking about, it is derived using other data, and the data come from the source records and books of prime entries. A topic in question that we are going to look at is my favorite topics. I really like it. It is usual to record a business transaction in a document. So these informations are put in document. Just example includes invoices. How we know the invoice, what invoice is? If you deliver goods or services and somebody have to pay you, that person will demand you, not verbally, will raise what's known as invoice. So invoice is a document that demands for payment by the persons or organization who delivered the services or goods. Orders, that's another term. Order means instructions that tells the supplier what he should give to the person or the organizations who need the good. Credit note, this is always to address any excess in invoice. Correction of invoice is done through credit notes. Good receive note. Good receive note, while you are receiving the good, you can't just receive the good without documentation. If you ordered for good to be supplied to you and a good has been ordered, you need to list those goods down, their nature, their quantity, their specifications, and their quality. They're all entails in good receive note. It comes from the word receive. Is the note which is used for receiving goods. Just simply like that. So all of which will be discussed. That is a good news for us. In section 1 of this chapter, in the terms of accounting system, those are known as source document. Those are known as source document. Remember the topics here? Source records and books of prime entry. So you now know where the source document are. So if you are asked, what are the source document? The source document is what we have discussed here. If you have not forgotten, we have discussed something called invoice, something called credit note, and something called good receive note. There's also delivery note. There's also debit note. We shall discuss all those. You now know what are source document. Mark that, please. Please ensure that you mark that. We're going to use them times and again. The information on them is processed by the system. For instance, example, Aggregating means adding together. Auto grouping means classifying in accountings. We are here to teach an ordinary person who doesn't know accounting to know accounting, not even going to the class, but just watching this YouTube channel, because everything will come here. What we just need to do to buy the data and keep listening. Records of such document are kept in Book of Prime Entry. Book of Prime Entry, underline that. I'm going back to this source, record, and books of prime entry. You see the interconnection. The source documents, we talk of invoice, credit note, debit note, could receive note, delivery note, must be recorded in a book known as Book of Prime Entry. Book of Prime Entry, sometimes we call it original books of account, the source book, the book that first that record first and information. Let's go. The various types of book of prime entry are discussed in section 2 to 4, and petty cash is considered briefly in section 5. In the next chapter, we consider what happened to transaction after books of prime entry. I hope that is clear for our introduction. I hope that's clear. You have any comment, please ensure that you give your comment. I will respond to these comments in a video posted. I hope we are good to go. We can go and dive into the topics, and we look at our topics now a little bit in detail. Study guide, the use of double entry and accounting system. This is the main topic. Under this, we are going to look at number 1, double entry bookkeeping principle, including maintenance of accounting record. By the way, I am telling you, if you are interested to know accounting, know what is double entry bookkeeping principle. Once you get to know that, you are done with accounting. You are done with most, because almost everything will use this principle. Very important. And at that, we are going to look at identification and explanation of function of main data and accounting system. We're going to identify and explain the function of main data and accounting system. Main data of sources in an accounting system. This sources is the one we have just talked about, the source document. We're going to look at the outline, the content and purpose of different types of business documentation, including quotation, sales order, purchases order, good receive note, good dispatch note, invoice, statement, credit note, debit note, remittances, advisory. If you are a procurement officer, if you have a business where you buy goods, you sell goods, you're an accounting officer, you are a director, you are an auditor, etc. This is the topic for you. You might know, but this would act as a refresher training for you. You can see the kind of document that we're gonna discuss them, what they are, purpose which they serve, how relevant are they, in terms of your business, recording and deducement of profit or loss. All those good would help you to know whether you're making profit or not. Secondly, identify the main types of business transactions. Example, sales, purchases, payment, receipt. Now, when we talk of transactions, buying and selling can take place when you sell, can take place when you buy, can take place when you pay, can take place when you receive. So that is sales is used for recording sales. Purchases is used for recording item boards. Payment and list of item paid. Receipt, that is list of cash received. So that is that. Everything simplified. Make life easy, please. Let life be very easy. We don't want somebody to complicate matters. 2. Remember, we're looking at a double entry system. The first one, we have tackled double entries bookkeeping principle. The next one is going to be ledger account. Another new term. Ledger account, books of prime entry, and journals. So, under ledger accounts and books of prime entry and journal, we are going to identify the main types of ledger. You see now, we are out of now the source document. We have gone to ledger. Main term of ledger account and books of prime entry, and understands their nature and function. What is a ledger? What is a book of prime entries? You need to distinguish between them. We need to distinguish between groups or records or classifications of book or prime entries. They goes into what's so-called ledger. Ledger is like a folder of books of prime entry. So it is a mother of books of prime entry. That is just make life easy. Gonna look at it. Recording transactions and event. There's another topic we are going to look at. And then that we are going to look at sales and purchases. You know the term sales, you know the purchases very clearly. Understand the records of sales and record of purchases. What is so-called record sales and purchases returns. So how do you do record of sales and how do you do of anything which is to be entered in purchases returns book? Finally, we are going to look at cash. We are going to understand the need for a record of petty cash transaction and cash book categorizations. We are going to go to the details. So that is that. Remember our first topic, as we said, it is the role of source document. The role of source document. We already know what the source documents are. So let us dive into the intestine, the ingredients, the role of source document. I will read and explain. Business transactions are recorded on source document. I will move slowly. Source document we already know. We said source document are things like invoices, credit note, good receipt note. Example include sales and purchases, invoices and credit note. We were F that they include the sales, informations or data for sale will be recorded there. It forms part of source document. Information for data for purchases when you go and buy items from suppliers is also a source document. And invoices as source document and credit note source document. I want you to know how they are linked. how they are linked. Sales. Look at that, sales. When you sell good, there are two types of sales. We have cash sales, then we have credit sales. Here we are concerned with credit sales. Cash sales are recorded on a cash book. So when you sell good on credit, then you as the owner of the business, you need to demand for payment. You need to write list of items that you have sold on credit. The list of items and their respective amount and their quantity are recorded in what is known as invoice. Are recorded in what is known as invoice. Are recorded in what is known as invoice. I hope that is very, very, very clear. I hope that is very clear. So invoice goes with sales. Invoice goes with sale. Understand this? We are going to use those principles. While when you buy good on credit, when you buy good on credit, you have issued purchase order. Purchase order means you listed numbers of goods that you want to be brought to you. You release to the supplier, ordering suppliers that you want to buy. Buy mean purchase. You want to purchase those goods. That supplier will issue you a credit note. So note that. Let's dive into the detail. Types of source document in details now. Remember, we look at them and they are there. Whenever a business transaction takes place involving sales or purchases, receiving or paying money, or owing or being owed money, it is usual for the transaction to be recorded on a document. I want us to stop there. This is the beginning of the whole things. When sale happen, when buying happen, when you receive money, when you are paying money, or when you need to pay money, it is called, all of those are called transactions. So this event must be recorded in a document. Those documents are called the source document of all the information recorded by the business. I hope it is clear. Document used to record the business transactions in a books of account of the businesses includes the following. Please, guys, we talk of quotation, we talk of what. Now, this is the in-depth knowledge. Some people talk here of those terms they don't know in detail. We are approaching this from an accounting perspective, but these can be used across the board. And this is very common in data. You go to the market, you hear of this. You go in the office, you hear of this. What is a quotation? Let's understand. A document sent to a customers by a company stating the fixed price that would be charged to produce or deliver goods or services. Quotation tend to be used when businesses do not have standard listing or prices for products. For example, when the items or materials and skills required for each job vary according to customers' need. Quotations can be changed once they are being accepted by the customers. There you go. It is very clear. In a circumstances, if you want a services or you want good to be brought to you, you list them down and attach them to their prices, and you see, well, this is how I sell my goods. This is the types of good that I have. This is the type of good and the quality that I have. You see, quotation tend to be used when business does not have the standard listing. As you know, we live in a dynamic world. We live in a dynamic, like take for instance, if I want to paint my house, I can say I go to the market down, or I call, or I send email. I say, guys, I want my house to be painted. Can you tell me how much you're going to paint my house? The document that they will send to me is called quotation. One accepted, you are not supposed to change unless quotation can be changed once they had been accepted by the customer. Please understand that. Purchase order, a document of the company that details goods or services which the company wishes to buy from another company. Wishes to buy, that is the keyword. 2 copies of purchase orders are often made. One is sent to the company from which the good or services will be purchased, and the other is kept internally, so the company can keep track of orders. Purchase orders are often sequential in number. All right. When you now say, I want to buy those items, I'm ordering you to bring them. They are called purchase order. Wishes to buy, that's the word, wishes to buy from another company. Wishes to buy, you want to buy those things, you don't have them, but you want to buy. You send what's known as purchase order. Sell order, now you already have your good, now you want to now sell. A document or company that details an order placed by a customer for goods and services. The customer may have signed the purchase order. You see, purchase order comes first to the company from which the company will then generate sales order. Sale order are usually sequentially numbered so that the company can keep track of orders placed by customer. I hope you are following. I am saying, and we are saying, that sales order follows purchase order. Purchase order comes in, then now once the good is there, you want to sell to your customer, you generate now sales order, and sales order goes. One sale orders are usually sequential. You have to number them. Good receive node. You have already sold good and you are receiving them. You already ordered for good and you are receiving them. You have ordered for good and you're receiving them. Good receive note. A document, good receive note, a document of the company that lease, the good that a business has received from a supplier. From where? From a supplier. Good receive note is usually prepared by the business owner, warehouse, or good receiving area. This is discussed further. So once what you have ordered had been delivered, you need to receive them. Good dispatched, this is by the seller. A document of the company that lists the good that the companies have sent out. The key terms there, send out to customers. The company will keep a record of good dispatch note in case of any queries by customers about the goods sent. The customers will compare the good dispatch note to what they receive to make sure that the item listed have been delivered and have the right specification. So good dispatch not always done by you who is selling good outside. Good receive note is the note that you use for receiving good from your wholesaler or supplier. Invoice, this is discussed as below. Statement, a document sent out by a supplier to a customer listing the transactions of customer's account, including all the invoices and credit note issued and all the payment received from the customers. The statement is useful as it allows the customer to reconcile the amount that they believe they owe the supplier to the amount the supplier believe they are on. Any differences can then be queried. A statement means a document sent by the supplier, because you are supplier, the persons or the business that gives you good to sell will entail what has been invoiced to you and what you are paid, and the balances of the item that has been paid is called your statement. So in out, debit and credit, we shall discuss with that credit note, a document signed by a supplier to a customer in respect of good return or overpayment made by the customer. It is a negative invoice. This is discussed further below. This is discussed. Credit notes. Now take for instance, if you are to pay your supplier 1,000, but you paid 1,100. 100 is overpayment. So he need to now send to you the credit note so that you adjust that 100. It is for correction of overpayment. Debit note, a document sent by customers, send the same customers to supplier in respect of good returns or an overpayment made. It is a formal request. It is a formal request for the supplier to issue a credit note. A debit note is an opposite of credit note. A debit note, it is a document sent by a customer, while credit note is sent by a supplier. Debit note sent by the customer to the supplier in respect of good returned. By the way, if say you again bought things for 1,000 and you realize that item for 200, the good is not good, so that means the supplier need to revise the invoice to 800. You send what is known as debit note to your supplier. Remittance advice: a document sent to a supplier with a payment detailing which invoices are being paid and which credit note offsets. A remittance advice allows the supplier to update the customer's record to show which invoices have been paid and which are still outstanding. It also confirms the amount being paid so that the discrepancy, that is differences, can be easily identified and investigated. Remember, we look at the statement. We say it's a document sent by a supplier to a customer. So now, remittance is a document sent to a supplier by the customers, which shows the amount paid, the invoices which is paid, the invoices which need credit note to address. Is actually what has been paid, what have not been paid, overpayment, and a payment. You send what on remittance advice. Receipt: a document confirmation that a payment has been received. This is usually in respect of cash sales. A till receipt from a cash register. This is discussed further. So that is that. We are still looking at the invoice, and we discuss those types of invoices. We are going to look at again invoices, the types down here, and some information that contains the invoices. This is double entry system of bookkeeping and accounting system. We are looking at the source document, prime books of account, the primary informations, the book of original entries. So for this time, we are going to stop here. Check our YouTube for continuations on 1.2 invoices. Please, guys, this is a very important topic that forms the basis of accounting. Let us pay more attention, and you can watch it times and again so that you understand the basic information. More especially, this is for somebody who want to train himself. If you're a business person, you are selling, you have not gone to school, you have gone to school, or you may be a medical person, you are a director, and the rest of it, please ensure that you tune yourself here. Maybe you could be knowing you're an accountant. This is also good to refresh your knowledge. So that is that. I wish you all the best. Thank you for your time. It will do you nothing if you subscribe and share this information, this website, because amazing things are coming along your way. Thank you so much. Love you all, guys. Thank you, the family of Riaso Media. Thank you so much. Thanks.